Hello and welcome to this session. This is Professor Farhat, in which we would look at auditing capital stock accounts. Now, when we say capital stock accounts, what we're really referring to is equity. And what we are really referring to is the capital acquisition and repayment cycle. What does that mean? Well, let's go back to the accounting equation. How do we acquire capital? How do we acquire assets for the company? Assets are coming from two sources: liabilities, which is debt, and equity. Now, we audited the liabilities in the first few sessions. Now we're focusing on equity. In the prior session, we looked at the internal control when it comes to equity, and we learned about the cycle overall. In this session, we are going to look specifically at auditing, which assertion are concerned with, you guessed it, capital stock accounts, the equity accounts. So we will cover key audit assertion related to owner's equity. Now you might say, we keep going back and looking at these assertions. Well, yes, it's important. It's important to know the meaning of the assertion: completeness, occurrence, so on and so forth, rights and obligation. But you need to know how these assertions apply to various accounts, and the relative importance of an assertion versus the other. For example, when we're dealing with an asset, it's occurrence, it's existence, versus a liability, it's completeness. It's not only knowing the assertion meaning, knowing how does it apply in a cycle for a specific account. So specifically for equity, we'll focus on occurrence, completeness, valuation, and completeness of disclosure, or simply put, presentation and disclosure. We'd focus a little bit more on required disclosure, which is basically what? Clearly communicating information about shares, dividend, and equity transaction. Where do we add these disclosure? Let's go ahead and dive into the session. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Our audit course is best for online students and students who are struggling in their audit courses. We cover the essentials from audit reports, internal control, ethics, evidence, sampling, planning and materiality, assurance and non-assurance services, and of course, the accounting cycles. Our comprehensive course includes lectures, multiple choice, true-false questions. Go ahead and start your free trial today. We are here to help. Your success starts here.
Starting with occurrence and completeness. Hold on a second. Don't we often say it's either occurrence or completeness is more important? Here they're both important. What's occurrence? Occurrence, making sure that the equity, that the capital stock transaction took place. And if we learn anything in the prior session, we stated that all equity transaction, the major ones, issuing stocks, paying dividend, those are major decision. Therefore, because they are major decision, large amount, they are important. And because they are important, there's a source of them, and that source is the board of directors. So before we issue stocks, before we pay dividend, the board of directors, they have a meeting about this, and it's a big deal. So you can verify transaction that they did occur by reviewing the board's minutes for approval. This is how you can confirm occurrence. And by looking at the board's meeting, you want to make sure you accounted for everything. Confirm total shares outstanding at year end with an independent registrar or a transfer agent. Match and record to the general ledger. Make sure completeness, everything is being recorded. If no external agent is used, and we talked about the external agent, the independent registrar and the stock transfer in the prior session. If you're not familiar with those, they keep track of your shareholder's name, addresses, if they sold the shares, if the company canceled any shares, if the company issued new shares, they keep track of that. If no external agent is used, and we're going to assume none is used if you're auditing a small company, you trace shares transferred to the stock register or certificate books to make sure whoever's getting paid is getting paid the accurate amount, going to the right person, and all the transaction of the transfer are accounted for. You would look at total shares listed in the stock record. You'd have a stock record and reconcile that to the general ledger. Make sure everything is accounted for. Detailed tie-in as well. You examine canceled certificate. Well, and if that's the case, if a certificate is canceled, that's occurrence. We want to make sure it happened. You want to inspect unissued certificate. If the certificate is unissued, you want to account for it to make sure the one that are issued are accounted for. It's a form of completeness. You want to make sure you are recording all the numbers properly. Here deals with valuation. For cash issuance, when you issue stocks, confirm valuation by computing the stated value and the excess assigned to the capital. When you issue stocks, when you debit cash, credit common stock, credit paid in capital, are these the correct amount? How do you do that? You recalculate. When you're paying dividend, you compute the dividend. Trace cash received to the cash record. Well, what did I receive? To the cash receipts record. Did I receive what I'm supposed to receive? For stock issued in exchange for assets or services or merger, you have to be careful whether we are issuing small stock dividend versus a large stock dividend, because sometimes what you do is you issue stocks for dividend, or you issue stocks for assets or for services or for mergers. You have to be careful. If it's a small stock dividend, you record the transaction at market value. Well, you should know this from financial accounting, and that's why I always say you got to learn FAR, financial accounting, before you learn audit if you're sitting for the CPA exam, because those are the things that you might face in your auditing exam that you should have learned in FAR. Or if it's a large stock dividend, you would use the par value. So that's why you have to know the difference. You verify by recalculating the value and tracing entries. Large stock dividend, you record things at par value. Small versus large, you need to know the difference. Let's take a look at this multiple choice question from farhatlectures.com. Which of the following is not among the auditor's concern in the audit of capital stock and paid in capital in excess of par? So when you say it's not, it means we have 3 is, yes, and 1 is not. So we need to know which of these is not a concern when we audit capital stock. Completeness test of control and substantive test of transaction. Is this a concern? Absolutely yes. We want to make sure we want to record all the transaction in the equity, because even one transaction could have a major impact. Therefore, completeness is important. It's a concern. Therefore, it's not the correct answer. Occurrence and accuracy test of control and substantive test of transaction. Is this important? Absolutely yes. Just like you have to account for everything, occurrence, you have to make sure it did happen, and if it did happen, you have the proper amount. Whether it's as a test of control or a substantive testing, that's a concern for the capital stock. That's out. Presentation and disclosure and accuracy test of detail of balances. Yes, when you present and disclose, presentation and disclosure basically applies to all account. Why? Because you want to tell the users more information than just the figures, if there's anything else. So usually that's always for all cases. D, rights and obligation of test of detailed balances. That's not really a concern. If you have stocks, if you're issuing stocks, those are your stocks, the company stocks. There's no issue with the rights and obligation, and you have no liabilities. You could have, like, if the stocks are pledged for a debt, but that's part of the debt cycle, not the capital stock cycle. So D is the correct answer. It's not really a major concern. The major concern are completeness, occurrence, and accuracy and presentation. What should you do now? You should go to Farhat Lectures and look at additional resources, whether you are a CPA exam candidate, an accounting student. The best investment you can make is invest in yourself, which will pay you dividend down the road. Good luck, study hard, and of course, stay safe.